Greetings, market rebels. Welcome to this week's combination macro measure video combined with sector situation. There we go. It is Friday, February 14th, 2025, and I think it's about 20 to 5 p.m. here on the East Coast. I'm Wayne. We're going to get into it. Hope everyone had a good week. Happy Valentine's Day. Happy longer weekend, and I hope everyone has a great and safe one, and hopefully a good week next week. Here's our trusty disclaimer from Market Rebellion, and here is our trusty intellectual property rights notice. And then finally, here is last week's slide with a couple of little, I guess, enhancements. Let's see if we could pick out anything that was worthwhile from last week. Yeah, I think the tricky vol at the top actually has been that way. It hasn't been right the clear sailing all systems go, which I'm actually using this week as a joke. But yeah, I think right there's been some times where it's been a little sketchy, and we thought it was a tough call to make, and you had I think a week where it wasn't. It started out a little bit I guess rough, and then we kind of were okay, and then we got a little rough, and we got better from there, type of a thing. But yeah, I think the big story probably was just that this note here about how we were near bounce levels, in CNN fear, greed, and AAII. So, and then with the Trump tariff news, with the economic data, we kind of kept DEFCON elevated. The market shrugged that stuff off, as it's been doing, generally speaking, for quite a while. And then we kept the Esther House warning, which is basically the same thing, but just another way of reiterating it. So it was kind of an okay week. I think things got a little bit better, and we'll get into that. So we may as well just go with this week's slide to start covering it, since it really wasn't the most eventful week. And so this week we're going with all systems go. What the? Because this is really interesting. You've got some stuff that's on the charts, looks pretty good. I think this week there was a little sort of lurch towards a fairer complexion here for the market. I think breadth helped itself out, if you will. The market did a nice job at kind of improving on breadth a little bit. And also sectors, they all kind of hung in there, or some started moving up nicely. Some just kind of didn't fall further, and some kind of traced out more of their consolidations and look like they're closer to wanting to go with an upside move that the market could make. But at the same time, there's some strange things happening, right, that you can't really just completely dismiss. We don't really cover things the way we once did due to various factors, but time being one of them. So the good news, I think, this week, generally speaking, I think it's good news when you get possible lower highs in the dollar, and the yields, they start rolling over like they did. That's pretty good. They could crack their levels. They're getting close to where now they've got the lower high in place, and the support lines we might be able to draw on them are getting close. So that could be interesting, and it could be potentially a positive, I would think, for the market. It normally is, but again, you have specifics in each situation. We already noted this. Let me get my laser pointer, since it seems like it disappeared on me. Oh, it won't give it to me. Why not? Is it giving it to me up there? Well, I guess it's popping up now. I'm not sure what took so long. But yeah, so I'm trying to look at the fear and greed again. These are still at levels that support, I think, a goosing. So that's good. And I really think the charts on these three, it's right there, right? They're all kind of like right there, and it's there for the taking. So they just need to step forward. So we'll talk about the consolidations, that everything sort of is working its way through towards the upper end of those ranges, and how that does look like it's on the cusp of a breakout when you add the improving breadth and sectors to it, right? And you have the still subdued fear and greed AAII survey data, combined with yields dropping and the dollar rolling over a little bit. That's the good, right? That should be things that I generally help the market. The bad is that delinquencies are going haywire to the upside, and different ways, credit cards, et cetera. I'll try to show some tabs on this. XHB, right, a really big and key area to the US economy, typically, or at least in modern times, that's still not really performing well. It's not considered a sector of its own, but you do have that sort of sector ETF, if you will, that covers it, XHB. And there's metal shortages, right, popping up. It seems like in more places around the world. So, and we've got the VIX with a sub 15. So it's not completely on the mat, but people have kind of left it for dead. They're like, oh, the VIX is dead, right? No one cares, except for we had one big player step in again this week and get another big VIX hit out there, which I'll show in March. So that continues to happen. As I noted in cocktail hour earlier, uh, this doesn't always happen, right? When we had strong uptrending action much of last year, the VIX players sat it out. They positioned themselves at some point kind of in June, and then we didn't really see them for months and months and months as the market just did its thing into the election, and then sort of through the election. So that's interesting. I would say, despite how much better things are starting to look and how close we are, don't get cavalier. Don't let them lead you into a false sense. Don't let them lull you into a false sense. We still would keep with that. The small floater game, they tried that again this week. I'm going to show how they got started with some of it last week. And so that is usually indicative of a market that's about to go into a melt up, or it's indicative of a market that's already on borrowed time. Usually, when those guys start really trying to beat those short squeeze drum in these smaller floaters, or just sort of like rinky dink names that have some short data, they add a little UOA to it. Usually, the charts aren't very good, but they can create a flurry of activity. And if you are smart enough to roll or trim and not ride it all the way back down and then some, you can eke out some nice gains at times, and at other times much more. So it's all about how you handle it, but I'll show some of that. Retail gone wild part two. Since we mentioned it last week, they're still going wild. And Deutschland too is the ad, because they're buying stocks in Germany, and meanwhile the data over there is not very good. You could say, well, the market's forward looking, but there's a strong divergence, which I think I have a tab on. I still am concerned though about SMH and Nvidia, because they haven't broken out completely yet. They're not, even if they do it, we have to be on guard for a false breakout as always, and we'll have to wait and see what happens with that. But this whole problem really is the story being built, about what this will turn into. And it may not turn into exactly what a lot of people thought it would when they bought oodles and oodles of shares of stocks related to the AI build out, this, that, and the other thing. So if that really shifts, and I don't necessarily think that story is going to shift, but I have to allow for the chance that it could, then it could really be a big problem, I think, because people will have realized that they got too far ahead of themselves and put too much money at risk on something that may not play out scenario wise how they expected it to. And then so that's the bad, excuse me. And then what the H is going on here with these metals, and all these other problems that are cropping up in the economic data, and with the consumer. So that's why I'm sticking with, I'd still be low key serious in terms of news neutral assumptions. And then most likely scenario I still would say is breakout attempts, because the uh, you've got the long-term trends up, you've got the technical shaping up, you seem to be on the cusp of these consolidations resolving themselves and the incoming trend reestablishing itself. The CNN, Fear, Greed, and AAII are still near bounced levels where they should support that. And then the public FOMOing to buy. I mean, I'm kidding around with the A added in, but that's because there's almost the foaming at the mouth is the stage is almost here. So that could lead to a real melty phase, that the take your breath away phase I've talked about many times that we've yet to see. And that could really blow people's minds. But hey, it won't be the first time. It won't be the last time. So on that note, let me switch over to the charts and our tabs and things like that. I'm going to stop the share briefly, and I'm going to get us positioned so we can take care of the important stuff. I don't know why this is doing this. There it goes. And let me get us the right share. It's a different screen. So where is my Zoom? Let's share the screen number 4 is right there, share. So I'm going to go through these first, and you're still right at the top of the fear portion of the gauge with CNN. Again, I always say this, but it's true. Like, certainly not a perfect measure, or I wouldn't say this is the greatest construction possible of this kind of a gauge, but at least it's something we can go to, right? That anyone can go to and check out. And that got that way. And that's one reason I put that in the newsletter, the momentum newsletters last week, was that, you probably had to consider that all things being equal, if they can, they're going to try to lift things out of fear when it gets to where it was. Now, this has also been very interesting with AAII data, because you can see that we are the lowest we've been in about a month. And you'd say, okay, big deal. But those readings are some of the lowest readings by far in terms of bullishness, right? So really, it's not looking good in terms of bullishness. And this is contrarian. So, or if you're new, you now know it's taken to be contrarian. So when you have this kind of stuff going on, look at your bearish readings. You're up there at 47.3. So I don't have all the historical data, unfortunately. They only publish a certain amount without having to go to I guess, a spreadsheet. But this is the highest bearish reading right since September. So one of the lower bullish readings, by far the highest bearish reading. And to me, that really sets them up for their breakout. And we'll talk about that. But what I wanted to show first is the bad, right? So we've got this auto loan delinquency, and this is starting to tick up somewhat. Here's one from February 12th. I can't vouch for the data. I can only go off it. They say it's the Federal Reserve Consumer Credit, Bank of New York Consumer Credit Panel. But I've seen this from other folks where you've got this big issue really coming into play in terms of auto delinquencies. So that's the start. I think someone had said they were at their 19-year high somewhere. On this one, you've got credit card delinquencies. And these are supposedly the 90 days plus of delinquency is that jumped to 7%, the highest in 14 years. So you've also got record numbers of supposedly of multiple job holders, because of how really folks have been forced to do that, probably due to inflation and just lack of wage growth. So there you go, which you can blame on a lot of different things. Here is your commercial, I guess, commercial backed CMB has a commercial mortgage. I'm trying to think of what that. I'm getting tired here. It's the end of the week, but my gosh. Anyway, the loan delinquencies on office space are starting to perk up. They're surging right now. So that is another not very good sign. You've also got freight from Liz Ann Saunders. Here's your freight shipments rolling over right now. So that's not looking so wonderful, right? Maybe that's one reason why XTN is not roaring. Retail. This is from not even, I guess, 10 days ago, only a week ago. And here's the retail sentiment score. It reached a new high. So you've got to go back, I guess, further, right, than even the meme stock mania to in 2021 to find a higher reading, if it even exists. They're saying it's breaking all records. So there's that FOMO with the A that I'm talking about, the A added. Here is the European equity valuations versus German business confidence. So confidence, as you can see, is in red. It's really rolling over strong. And meanwhile, right, they're goosing the living daylights out of the European equity markets, according to Winsmart. Um, this is where it gets the what the H is happening in terms of Korea's halting sales of silver bars amid soaring demand. So they're cleaning out the physical supply of apparently of gold and silver in many places. I've heard it's gone everywhere except for the United States. I don't know if that's true. I can't confirm that, but that's one report I did come across. So here's another person reporting the same thing. So getting interesting as we had a discussion about that in cocktail hour today. But as far as this goes, I'll look at some other things. But what they're trying to really do is this was an idea that we had last week when this started perking up a little bit again. And I thought this one was an easy ad because it was an AI name. The technicals were getting better. And the short percent of float, assuming this is accurate, is quite high. I've seen higher, but that's still a very high level. And then this type of stuff started spreading, where from this name, and there was kind of like earlier in the week last week or midweek, I guess. There were a couple others, but then I can't. And by the way, I can't get them all into the service because it's there's too many, and I don't necessarily think all of them are interesting. I try to do what I can to find the more interesting ones, and hopefully we catch some of those tiger by the tails here and there. But some of them were. What did we have this week? We had a recent one in go, I think it was. Where and that's the thing. These things can really happen quickly. Where so you've got to be able to trade them pretty quick or have your management plan in place is going to handle them really quick. But this one had a small float. It could still have potential, right? And you've got this short ratio of 21, which is very high in my experience. Not the highest I've seen, but very high. And the short percent of float again was really high. So a smaller float there compared to what we saw with BBAI. And I think this one had a little bit of a pop. But anyway, that's what's been going on lately where when this happens, and the reason I'm mentioning this is that this is a sign of FOMO, and that game sort of trying to make a comeback. And when that game appears, I've said it many times, but you're either usually late and there's problems generally right around the corner because it's gotten a little out of control, or you're on the cusp of a melt up phase. It's not always like that, but it's quite frequently like that in my recollection. So I think you really have to be careful because of that, right? This could really go either way. And the charts say it could go either way. And the economic data and the demographic data and things like that, they also say it could go either way with good and bad. So it's a very, very interesting juncture, to say the least. I think that's why I put that in the brief write-up that we have. And I did have this update where there was another VIX hit. So I wanted to show this for everyone because, right, like I'm looking at the chart saying I don't really see a lot of trouble at the moment, but some players continue to position themselves out in March and out in April with respect. And I've been putting these in for folks that are part of the service so they know that this is potentially really big. Now, it's not like these guys or gals hit on every one of the things they do. I mean, I've seen where maybe they've just hedged and that's it, or maybe they were wrong, whatever. But you could see March, Feb, March, Feb, March, Feb, March, Feb. I feel like there was a couple Aprils in here. I'm not sure if I mislabeled them or not, but I'm not going to go into it. But yeah, the March, you can see that it's just been picking up really lately, right? In the past couple of weeks, we've had a couple really, and a couple of them are very large as well. Let me try to show that maybe we can get a couple that will show up here where you'll see there's a couple of 150,000 lots. So there they are, a couple really large trades in March. There's the April one. Oh, that one that was in my recollection, but yeah, I went back a little bit further. But you get the idea. So yeah, this is starting to pile up in the next few months, and that's interesting, right? So I wanted to cover that because I just want everyone to keep their risk appreciation wits about them. Just stay right. Just don't let them, because we've just keep finding a way to uh, dip a little bit, and then they buy a dip and buy, and then you see some of these incredible moves, and people are going bonkers on earnings. We had a we had this. We're not really into pure speculation all the time on every earnings that comes out, but we try to pass along ones that we think are interesting. And someone showed up, and this has been my argument for a long time, having been a market maker for many years on the floor, and then having traded on desks for a while. And people say that oh, I would disregard anything that's longer dated, and if it's small. And here's someone that right in front of, right, look at this, earnings per share were estimated to be released that day after the close, and this went out, what, I don't know, this went out I don't think that time's right. I don't think that's East Coast time, but I could be wrong. Anyway, it went out that day, and smaller in size, way out there in time. Why would why would you do that? It was at the money. It was an at the money call, 140 call with the stock near 140. But why would you do that? Right? Like, my way of looking at this is that, and it always has been, is that um, these guys could have waited for the next day to buy these if they wanted to, but instead they insisted on doing this leap at the money buy that day. Why? Why would you do that, right? If you're a long-term player, why are you showing up knowing that there's risk? So that to me is something I wouldn't write off. I know a lot of people don't like them. I'm not saying they're wrong. It's just I look at it differently. So to me, it's more about the timing, not necessarily the size and the because they could have just waited, or they could have bought the week before. Why are they doing it right in front of this risk event? So I thought the way that some of these upside moves were looking and all that kind of thing, this could be an interesting one for our folks to take a look at. And they went, I think the stock went up strongly, I think, on that news, on the whatever news came out that they liked in the conference call, or whatever the case may be. But that's the thing. There's been some really crazy outsized moves, and that also doesn't happen all the time. So to me, when you get that kind of a situation, it's not saying that you immediately have to go down. What stock was that? Oh yeah, A, B, and B. Um, it doesn't mean you immediately have to go down, but it means that there could be this melt up phase. But if you look at this, and I think I might have even noted it in the write up, but the charts were really starting to look good in front of this. I think you were in this protracted downtrend, and then you started to break up and above your 200 day there in purple. That left all your SMAs to the south. A lot of this doesn't even matter at times with earnings, though, because you could make great technical cases or poor technical cases, and you get a tremendous reaction the other way. But it was just the way that they were getting their hands on some stocks, and the way that these guys kind of timed this very expensive buy. And those were $34 calls. So it is what it is, so not a like, oh, this is what we do. We don't really trade, like I said, every earnings thing, but this is to me more indicative of the market we're in, where it's starting to get a little crazy with this kind of stuff. And this kind of happens every quarter when you're in a strong uptrend. Let's get into that, because you get some stocks that do this. But usually, right, when you start to get this happening too frequently, and there's too many of these, and I think, didn't you have something like that? But I'm trying to think, was it DraftKings? We had another one, I don't remember. But this is another kind of, for that stock, that's an incredibly strong reaction, type of a thing. So they're getting a little wacky. It's getting the FOMO is getting a little crazy, and you've got to be on guard. It's just, again, I think you have to keep trading this trend. But let's look at this SPY now finally. And if you look at this again, I should probably just simplify it by going to more of a weekly chart for us. If we go to, that's too much weekly chart, dummy. So if we go to just maybe like a 3-year weekly, so we can get a better picture. But I think you could see, I'll just put a box around it for now. I don't feel like getting into the triangle drawing, but you'll be able to pick it out yourself. As I say, Oh, it doesn't like something about that. It's not letting me put the drawing down. I apologize. I don't know what's going on there. Let's try it one more time. Okay. Um, Usually you click, you let it go, and you pull it and it works. There it goes. Okay, so it's sort of finally working there. And what I'm getting at is we could put a line. I'm going to just mouse over it so you can see the horizontal line. And then I'll just put this line here, to draw everyone's attention to what I mean by if you're new, especially, right, that you can see that there's sort of a support line under here. And since it's fighting with me, I'm just going to do this to remove all ambiguity for people that are new. So there's your ascending triangle, incoming uptrend. And it said to me, like you're on the cusp of a breakout. The weekly, also suggests to me like you're really there. I mean, you made a new all-time high today, right? You didn't close at that high, but you made a new all-time high this week. And so with that in mind, you're really right there on the spies. And as I said, you ought to be able to get follow through. I mean, you've got the dollar working in your favor. You've got yields at this point working at your favor. Let's take a look at those since I'm talking about them. And let me get more data for us so we can get some line. Oops. Oh, I think Thinkorswim may have reversed this. But so you're kind of getting where you're looking at this whole thing cracking, right? So this big move off the lows, near 100. Come on, why is it fighting with me so bad? There's a really aggressively drawn line. You crack below there. You could start giving it a little bit of leeway, and you could say, well, I want to anchor it differently than that. Maybe I'll anchor it, against this low that it was able to form. But it really lost that now too. So that's really on the verge of cracking. You could see that there's some former action back in here that should create some support about 106-ish, ballparking it just to round it off. But that's really the end of it, right? Where if you crack below there, then you start getting into a really deep retracement of the whole move. And usually that's a sign, right, that the best is behind us, and you have to really wait for the next setup. And it doesn't normally just come immediately. It normally takes a little while for that action to develop once you've cracked a trend that had been strong and been in place for a while. As far as yields go, here's your 10-year. And I think this is also looking like that. And you could draw this however you'd want, but even if we just take the last two lows, I don't know why this thing's giving me such a hard. I know these lines aren't perfect, but just you'll get the idea. So if you take the last few lows, you're just about right there. So yeah, if this low gets taken, these lows get taken out here. Let's call it at 44. Yeah, you've got some SMAs if you want to believe in them here, which would correspond to the bond prices and all that. But bottom line is that I think that's really where that is in terms of it's at risk of another plunge. So that's typically a pretty good thing. The VIX, again, kind of on its back, again, turtling up here, not really that great. Looks like, you at this point, you almost look like you could be headed down towards some of your lowest lows you've seen in some time. So you'd have to go way back to get, I don't even think that's a good tick, by the way, but you'd have to go way back to, I guess, the summer to even get close to that 12 area that's been a big deal at times. But yeah, that doesn't really look poised. It doesn't mean news can't change this thing on Monday morning. We're just looking at the general technical state, and I don't think it looks very good there. So if I see that sort of like dollar yields are looking rough, technically, and this is also looking challenged technically to move higher, all this would be with the bias of looking at it saying, can it move higher? They don't look like they're ready to do that. And if we look at these sectors I'm about to bring in, and remember, this is quick and dirty. We're not doing what we used to do, unfortunately, but it might be good overall to not do that really longer term, longer in duration stuff. But it helps me at the moment. I just don't like doing it this way. But This has all gotten a little bit more constructive. I think everything we look at, if you want to say, well, that's not that great or this or that, but yeah, like I think you could see that this is trying to rally now and holding in there. Energy's holding in there. XLK right after the dip, it really had a good. It really fought its way back and it's coming right back up towards the key highs. XLC continues to be the powerhouse and just make new highs. XLF regained its footing right after having a slide, so that's moving back up. Real estate is hung in there. Let's see. This is defensive, so XLV. Oh, that's right. I think they switched these around, but XLV being defensive and backing off, that's not a terrible thing. XLP Staples defensive as well. They hung in there, but you could say, well, that's not that great, but if it's defensive. But look, XLY did start coming back decently. Didn't finish well, but did start coming back decently. You had XTN, which was looking a little challenged. That also started to come back a little bit there. And you've got the materials and industrials that also kind of came back. So I'm looking at it like, okay, they're all a lot of, I shouldn't say they're all, but a lot of them are trying to come back from the dip we saw where they opened the market lower. A lot of things dropped down. XLU, I mean, that kind of made a new high today for the week. So a lot of these things came back nicely from the lows, and that's so heading into next week. We're kind of heading in, I think, on a higher note than we were just a few days ago, right? That's really where my lean's coming from. Just everything overall is a little bit better. The may as well take care of our let's take care of the breadth, and the breadth just isn't great. I think it looks like I have to reduce this one. Market breadth isn't that great here, but let me go with just SPY. Remember, the indicators really don't need to have anything in particular in the price graph, but I just want to make it clear what the market looks like versus these. And so you can see that McClellan oscillator started to perk up finally, and it took out this sort of inner, I guess you'd call it. Trying to think of the word. My brain's just a little tired though. I forget the word I'd prefer to use for that. I can't recall it at the moment, but look, it took this little high out here, if you want to call it that, and it naturally should try to work its way back up. This is nothing special, but it stopped getting worse like it was here, right? So overall, the bulls have been slightly winning on the new highs, new lows. McClellan summation is now rising. It's not rising at a rapid pace, but it's not designed to do that. It's designed to kind of rise at a mild pace or move at a mild pace, and it's sort of still uptrending now. And then some of your cumulative advanced declines and some of your stocks above certain SMAs and volume these are all hanging in there, looking a little bit better than they have. They're not great, but they're looking better, right? So that's another part of what I'm weighing and saying that if you look at the charts, things look pretty decent. They kind of look a little better. And then especially right when you look at, and I don't want to have all this stuff on here. That's why I try to keep it off. But we can see that if I get rid of that, we kind of see I'll try to move. Oh boy, I got to get away from this platform. I keep saying that, but it's just too busy, to completely get away, and just can't get everything I need that's customized redone. But there's your sort of triangle in SPY, and your ascending triangle through here and all that, and you're putting your higher lows in, and you're getting your similar highs in, and you're nearing the apex. And so this is starting to look better. The market is starting to look better while this is getting near the apex of the triangle. So there's not a lot of big trading going on. I think a lot of people are waiting. But it looks similar, right, in a lot of things, where you were sort of consolidating since mid-December, and you've got these higher lows, and you're working your way up, right, nice and cleverly, stealthily, and you actually you came close to a new high here today. So this is really on the cusp of trying to break out. It's not overbought. neither one of these things is overbought on the daily where you have to say, well, that's got me concerned that, I mean, in other words, I wouldn't be in a panic mode. I think a false breakout is always possible, and you always have to watch out for it or a quick retracement to convert former resistance into support. But at the same time, it's not overbought. I mean, you're looking at a 58 right now on the, or depending on which RSI I use, I'm 58, 59 on RSI. So that's fine to break out from. They've got a little bit higher of a low they're working off of on the 50 that they hit earlier this week. So they've got all that going in their favor. And even diamonds, I think, really started coming back, and they look, they to me look poised to try to break out as well, because they're not as clean of a triangle, but they've really hung in there of late, and you can see how close they are to these recent highs. So they've got the long term still upsloping, the 20s upsloping nice there in light blue. They just need to put a little something together, break through resistance, and they should be, one good day, which should have them potentially tapping on the door of the all-time high. So I think it's there. I mean, I think wherever you look, between like sectors improving, as I said, reiterate all the key things falling to help, sectors improving, breadth improving, all these things look good. Now, here's your IWM, and someone asked us about this. I think the big level remains. We talked about this last week. The big level remains 245, but you've got to get through. You've got to get through here. Probably let's call it 231 ish. Got to get through 231 to open the door to 245. So 231 becomes a big level again, but there's really nothing in its way SMA wise. The short, all the simple moving averages are, the short ones are all bottled up in kind of in this picture, right on the candle. But the other ones are all there. Just the declining 50 there in gold is the last of them. So if it can break above there, all the SMAs will be to the downside. This maybe finally will have a shot, especially if the dollar yields are rolling over. More so yields, I guess, for IWM than dollar, but you get the idea. If those continue to crack their support and drop off, it should normally help out, especially if the yields drop. I think yields dropping as far as they had is what helped this. And then when the yields started to reverse, shortly thereafter, this thing started rolling over hard. So if you get the big drop in yields, this should go. But almost all these major index ETFs look poised in some way, with IWM looking the worst of them all because it's been struggling for so long and it's so far below the performance of the other major index ETFs. But here's SMH, and I don't want to belabor our triangle. It's almost like there's Spanish moss growing off this triangle at this point, the way for as long as we've covered it. But there's a nice gap there that we've talked about a gazillion times, and I think it's there in NVIDIA as well. And yeah, I mean, this is looking poised to go. You're at 55 on your RSI, so this should really, but wants to take off and start filling that with the improvements that we've seen. Again, assuming news neutrality, right? Nothing crazy happens over the weekend, and you never know that. Trump is certainly not shy about making news, even over a weekend or overnight or whatever, when everybody else seems to be trying to get some sleep. He's somehow he's still making news, or the administration's making news. But so you got that. But yeah, I think that's there. And I think if you look at the runway for pre-EPS run, NVIDIA, we've got an idea on it. We had it as an idea, in a bullish idea, for 2 weeks in a row in Rebel Pit service, think Rebel Pit Pro. And Ryan and I were disappointed. We thought there was going to be, this gap would probably get filled this week, because we were probably a little more bullish for the week than bears. The most likely scenario was sort of noting that we were looking at those CNN AAII levels, thinking the chances are that if you have to really force a lean, you probably force a long. But it was a little tricky of a week. It wasn't easy to trade, but the way that it finished is pretty good. And this really looks like it should really just tack on a little bit more. And we're talking about $3 more or whatnot, $2 or $3 more, and you ought to be there, right? So on that gap close, and that was really the thought. But yeah, I mean, that's looking like it should really close the gap. The market's looking like it should help it close the gap. And this is a big stock, that clearly that would probably help ignite the market aside from its market cap, weightings that also help the indices and so forth and so on. So that all looks pretty good. I really don't see what the problems are with those charts. Those charts to me are there. I think Nvidia's got to do a little more work. Probably got to get up there, and you probably, let's see where your next big level. I would say, yeah, you probably really, you're so close to the highest high when you're near 150 that you may as well say it needs to make a new high, because really waiting all the way until 150 is just too far. But I would trade it to get towards 150. So we've got ideas on that one. I think we might have UA on that one. But I'm not saying it's all up and away. It's just we don't know what news is going to be there. But my way of looking at it is that this should really happen. In a news, and if we just have more of a neutral market, neutral news, this thing to me is showing the technical look or complexion that should allow it to go. And with the market still not really, with FOMO not being punished yet, it'll only engender more FOMO, or FOMO, or for FOMOing with an A. So you'll get that, and you'll get the psyched up about the earnings gang potentially stepping in here with about 10 days to go, roughly speaking, until we get towards earnings. When we come back on, I guess on Tuesday, it'll be less than 10 days, but you get the idea. That'll help SMH, it'll help Qs, it'll help XLK, and so forth and so on. It'll help the complex, and other things really moved as well. So we're coming into next week, we've got MU because as one of our ideas, because we're ready to trade it in either directions, but it either looks poised to me to try to jump up towards that 200 there in purple, which has been a problematic area for it, or right, the fact that it was as low as 87 and as high as 101 nearly, that's about $14. So yeah, it could certainly, right, if this market throws a curveball, there is news or whatever the case may be, whatever develops, this could give a decent amount back as well, because it's made such a big move off of that low this week. So it's not expensive to trade. Let me see if I can get that in here. MU, we thought it was offered really good value for folks next week. So if you go slightly out of the money, you can see these are, and there's going to be, remember, several days of data would need to be taken off of these. So it's going to be pretty reasonable, right, to trade for the week there. So there you go. Now the other thing that one of the other names that's in the newsletter is DXCM. And we thought this looked interesting because what did I click on? There you go. Yeah, this is really working its way up towards that 200 there in purple, or whatever you want to call it, violet. So you can see that, well, no, you can't see the way these pictures keep taking the wrong form for me. But yeah, you can see this thing is really close. It's really close to taking out these highs. There's a big gap back here. I don't know if a lot of them maybe like what they heard from the analysts or the conference call with management or whatever the case may be. But yeah, I mean, that to me is looking really good, and it's really inexpensive. Where's all products? There it is. And this is, I think this is very reasonable when you stop and think about several days worth of data should come off of that. So these are some, dirt cheap dollar-wise options to me, and that makes sense because your earnings are out of the way. So this was one we included, for the week there. We added an extra name or two, I think, this week. But anyway, that one, let me think about it. UPS, maybe. Ryan's going to put all the levels out there over the weekend if he hasn't done so already. There's a lot of catch-up potential here if they get their hands on this one. So I think we have UPS, and I want to say it was MU. And Ryan, I think Ryan liked IWM because if the market breaks out, that might give IWM, yeah, which is a good call. If it could break out here, it could at least move up towards those highs. That would be a decent little, for as much as the options cost, to move up $4 or $5, even at a modest move, that shouldn't be too bad. And you could see just how cheap the options are already. So imagine after a few days of theta gets knocked out of them. So now, granted, there's only 4 days of trading, so it is what it is. But uh, that's that. I think that's that. I think that's a good wrap for us. A good place to stop. I don't think there's anything else I can really add to it on if I'm trying to do things with at least some concern for the length of time we spend on these things. But yeah, I think it's there, and I think, as I noted in the notes, I think that there's a problem if they can't do anything. There's a problem. They should be able to. They should be able to put if we come in news neutral. They should be able to put something together to try to at least try a breakout attempt in the semis, in Nvidia, in the spies and Qs. They should really be able to try knocking on the door of the highs, and they ought to be able to try to push through. And I think there's a lot of things that shifted ever so slightly. I just wish I had a better feel about things. I wanted to make sure that everyone understood that there's players out there positioning for within the VIX, for the next few months, and they're pretty big, and we don't see those all the time. We haven't yet to see major index ETF put buying in a big way, though, and most of what we see, I didn't flash it all. We're getting long on time, but we didn't see. We have seen mostly almost all call buying. Our team just isn't finding many bear hits to put in there. We try to get one in here or there just so that if the plug gets pulled on the market with news, people have a trade or two or hopefully more there they can go to and say, okay, things have really shifted. But there just haven't been that many. So it's a little concerning that the complacency's that way. But this can persist. And so maybe we are going to get this. We're on the cusp of a blow off phase, melt up, whatever you want to call it. I don't know. I really don't know, but it's getting close to where they ought to be able to put something together. If they don't, right, there's a problem. We'll have to figure out what that is. Some people are going to say, well, you're going to get a double top. You could, right? We just don't know, but there should, to me, the way that they finished the week, there really should be an attempt to try to break this out if we come in just in a news neutral environment on Monday. So, and crypto, I wanted to note that we did see a ton of, there was a ton of call buying in Riot. There was call buying in MicroStrategies. We did see some Clean Spark and other types of things like that recently, not this week, but recently. So, but they did come in for MicroStrategies. They did come in for Riot with repeat hits. So something is starting to get interesting there. It's out in March mainly. So there you have it. Yeah, so you're real close there. If you could break out MicroStrategies, everyone that follows that knows that when that starts to move, it can really move. So that was another one on there. So on that note, though, I think I'm going to wrap up, and I'm just going to say thanks for tuning in. I do hope you got something out of this video that can help you in this upcoming week or some week in the future. Thanks for tuning in. Have a great weekend. I'm getting wiped out. It's getting late, so I'm going to wrap this up. Everyone take care.